Good afternoon, Scott Redler, T3 Live Chief Strategic Officer. It is Tuesday, and today feels like a lot of other days where we test both ends of the range, and you just gotta try not to lose your marbles if you're trying to short the bottom end or buy the top end, and realize that's just been the name of the game. And obviously, it's the name of the game until it's not. So that's why it makes it hard, because one of these times we're going to come into the bottom end of the range, and you're going to try and buy it there, and all of a sudden it's going to fall out of bed and you can get crushed. Or the same way you're going to short the top end of the range, and then you get this squeeze and you're not going to be able to handle it. So at least we found a way to deal with that, where we trade below a prior low, you come back above it, at least you have some type of edge. And in this market, you got to trade what you have an edge with. Whether you have a day one looking for a day two, whether something's tight to pass through a level where it gets through it and you take your trade, and then if it comes off it, you get away from it. Trade where you have an edge. That's it. If you look at the chart of the SPX, at least there was a little bit of an edge. What do I mean by an edge? Because this looks like a choppy mess. First of all, this trend is still intact. So today, what happened this morning? We traded through yesterday's low, which was 210.62. Okay, we all knew that. I tweeted it. It's in my note. And then we had the weekly low from last week, 210.20. So where did we go today? We went to 210.27, 7 cents above last week's low, and about 40 cents below this. So once you come off that low, you then could buy the bottom end of the range, or at least cover, because that's, I think, when I covered my hedge, I had a hedge on with some of my longs, and then put a stop in at the low end of the range. And then if you're in a good trade, it comes all the way back up to, what did it go to? 212.19. So from 210.62 to 212.19, whether you pick and choose when you want to sell it, you have about $1.40 or so, which is a lot of money that you can make, intraday trading. But if you bought up here thinking it's going to press to the upside and break out, then you probably were frustrated. Okay, you go to the 5-minute chart so you can see more tactically. How do you do that? So within the first, 5 minutes or so, you had this gap down, and we traded through yesterday's low, which is right here. That's where that line was from the daily chart. So this was your 210.60-ish. Came below, held, didn't fall apart. You didn't try and catch a falling knife. You didn't, break every rule. You then bought here. When it crossed back above 210.65 or 210.60, whatever it was, with a stop there, and then you had a pretty quick move back to 211.40, which was about, 80 cents? 80 cents is not so bad in this market, especially for the spiders that are liquid. You also had another trade here when it filled the gap, and then you could have taken your trade into the gap fill, realized that it held higher, and then there was another trade above the morning high. So if you said tier 1 here, tier 2 there, back to tier 1 here, back to tier 2, back to tier 1 because you didn't know what was going to happen, back to tier 2, back to tier 1, and then let it go. And then on this candle right here, this wide range bar that on a daily candle would be ugly, so on a 5-minute bar is pretty ugly too. When it broke this 212, that could have been your out. And if this wasn't your out, when it put in this bear flag, when you had this wide range engulfing bar that took back the entire upper flag, and then you saw no bounce here, you could have waited for that to be your out on your last trailer. So you would have lost on your last trailer here, that you might have been in from here or wherever, but that could have been your trade, and that could have made you your money. If you didn't buy here or didn't buy there or didn't buy there, and you waited up to here thinking that it was going to break out above this, you probably got a bit hurt. And I know I was actually out at the gym where I had a lot of positions on. I think I bought in here thinking maybe today is the day, and then I wound up getting stopped out right on this bar. So I basically broke even, lost a tiny bit, but at the same time, I had some other things going on. So that is how you use your 5-minute chart to get involved in a red dog reversal at the bottom end of the range off a daily pivot without having to catch a falling knife. Same way I guess you could have, if you look at the chart here, you could have shorted. You could have said, okay, I don't think we're going to break above this, 212.34. Never actually even got there. You could have shorted versus that or shorted versus this, and then again waited for I guess, you could have said, okay, I'm going to be short right here, versus this high from the prior day is my, I'm going to play this range and it's not going to get above it. That'll be my out. And boom, you got it here. Or you could have waited for this candle and said, now I could short versus the high of the day, which was, about 20 cents, and then make your 60 cents the other way. So whatever it is, at least there's some very surgical, tactical things to do with the right strategy where you're not really in harm's way. But overall, again, you look at the chart, it's getting tight, and who knows, at some point, something could give, and we'll, I guess, have to wait until that point. You go to the Qs, not much to be said here. Doji right in the middle, still very tight. We'll have to see what happens there. Go to the Russell, IWM. It's a little bit stronger today, not very compelling, but it actually was able to push through this. So I don't know if that's good or bad because it could have induced you to be more long, but basically wedging, just like everything else. And this is when you had your outside day, which gave you some clues for a down move, and now it's wedging again. And you could actually even probably draw your line like this. And we're coming into an area where we'll see, I guess, if this leads, it could help give us some clues or not. The bios still just hanging around, not breaking down, not breaking up. Above the 21-day, make this a little bit bigger. Not much to do here except for these all look the same, very choppy ranges. And this one came to the bottom end, and it's still right into this resistance. So at some point, we'll see whether or not maybe this leads and breaks out above this and can give you some clues that the market's going to happen or not. If it breaks below this, then you're out of the way. So the only thing good about a tight range is that you have points of reference to play an RDR around, or points of reference where if you break a level and it can't reclaim that level, maybe the direction gets continuation, which we haven't seen. As far as stocks, Apple, I'm flat overnight. It's not giving me any reason to really be in it. I was long overnight last night, and it was pretty much the last to go positive today, and you still don't see much here. It's below the 8-day. It's trying to hang on to the 21-day. Not leading. Apple is the best when it leads the tape, not lags the tape, and right now it's lagging a bit. But it's still not falling apart. We'll see what happens here tomorrow, 129.12. If it breaks below, or if it happens to get above today's high with some kind of volume and leadership, maybe it's worth getting back in. Google did show a little bit of strength today. It reclaimed a lot of these moving averages before falling up at the end of the day. Maybe it goes from a B play to a B plus play. Amazon still not doing much. Very, very tight, not falling apart. Institutions are still accumulating. It just hasn't broken out yet. Still well above this earnings gap. It's still on the radar. But you either have to buy it and not add to it and let it go and maybe put a stop at the low end of the range, or you use your 3 and 5 minute charts. But that's probably what's driving everyone a little batty here. At some point, maybe it gets above this 434, and if you see expansive, crazy volume, I don't know what's going to cause it. Maybe that's when it goes, and we'll all get a decent trade there. Netflix, I'm hanging around. Just these little narrow bars are a lot different than we're used to seeing in Netflix, so it's hard to make money there. Still above the 8-day, still holding on to it, but no real setup as of now. And again, buying strength here too hasn't really been working. With momentum names, you like tight setups that break above a level where you could buy it and sell it higher. Not, breaks above a range, comes back below it, goes back and forth, and then makes another high and pulls in right after. That's just the way the trading's been. And unfortunately, it is what it is. Today, though, pleasant surprise was in social. I went over it in my morning note, went over it in the morning call. You had your first day one in LinkedIn yesterday. Day ones are good. It wakes up a stock, gets some shorts to cover, puts it on the radar, even if it's a laggard or a bend play. And you look at LinkedIn, you had your day two, okay? And this was your day one yesterday when it crossed above this 199, and then it actually opened lower and traded above a prior high, which was 202.91, and hit as high as 207. So this was a great tactical cash flow trade that went first. You look at the 5-minute chart, how could you have played it? Right here, okay? This was yesterday's move. Same thing here, just to look at it on a 5-minute chart. Here was your wide range bar, didn't pull in that much, held higher, held the 8-day, and look at how it followed this 8-day trend all the way up here. Came in, this was the open today, and then as soon as it went above yesterday's high, you had a quick move from 202 to 204 and change. That was a nice cash flow trade if you were looking for it. And then it wound up going all the way to 207 and still it's a broken name, so you just got to take some trades. And then finally here, it was going sideways for a while, so even if you were trailing it on this bar, maybe you got out. So, LinkedIn gave you your first 2-day trade in a while, tactical, doesn't mean it's going back to highs, doesn't mean it's filling the earnings gap. It means that if you watch day one, you actually got a day two. Congratulations. Woohoo! Anyway, Facebook also did give you, a day one and a day two before selling off into the end of the day. That's why here too you have to take some trades. Facebook, kind of woke up. Let's go to the daily chart first. Woke up here, okay, gave you a red dog reversal like we just went over in the spiders that, woke up at 78.88. So if you took home a third, you know what, you said, okay, I'm going to give it to see if we can get day two. So on this day one, you made some money, you took home a third, the futures open lower, and I gave my morning call this morning, and even on the floor, I'm like, Facebook's a stock that closed real strong. First thing you do in a down tape is look for this to potentially go green. And if it can get above yesterday's high of 80.38, maybe you get some continuation. So that was the strategy for Facebook, which is a momentum strategy, and this momentum strategy actually worked. Okay? Yes, it went as high as 81.35 and then sold back down. So that's why there's definitely some frustration out there, but at least it gave you the opportunity to buy it here and pick when you wanted to sell it and not have to just sit in it the whole time. And if you go to the 5-minute chart, here you go. This was your, trade into, the down open. Okay, it basically held a decent portion of yesterday's range. Maybe went a tiny bit below it. But right here is when I think, in the chat room we talked about it, I got a little bit more aggressive. Then it traded above the prior day's range and then held in there. And then, gave even another move. This was the prior high right here. Okay, that was your first trade, I guess, through it. And then it consolidated and then went again above 80.80 all the way to 81.35. And unfortunately, it came in pretty fast. So you couldn't buy strength there. You had to buy it down here and maybe when it made a move above this high here and it never, came back below it. So into that, I know I sold some. I called in and put an order out, and then I still had a third left. And I was like, oh, I'm going to hold here. And then once this trend broke with this wide range bar, I'm like, I'm done with Facebook for a little while. That shouldn't have happened. So I'm back out of it. But at least you had your day one, buy it red to green, see if you can get some momentum, get a day two, and you got one. And then right there, you had to exit it and say, okay, that's it. We're not getting much more than that in this tape. But at least if you were prepared, that was a good setup and a good spot. BABA was similar. BABA, held where it had to yesterday. In the morning, it gave you some early morning strength while the futures got hit. And then it went positive, traded through a prior high, and then it just ran out of gas. I guess whatever fund it was that had an order got done with it or this and that. So once it leaves and there's no more pressure cooker there, you get away from it. You go to the daily chart on BABA, which I don't have overnight because I don't love the way it closed. Okay, I feel like I'll be able to maybe have a better play tomorrow because what did it do? It pushed through a momentum level. The momentum level was right here of 90.99, went as high as 91.54, which was right around this high, and then didn't close great. Didn't close horrendous, but not good enough for me to have some money at risk. But if you look at the 5-minute chart on why it was good pre-market or why it was good in the first half an hour, it was because of this. Okay, open lower, and then regrouped. Right here was when I think most of our floor was trying to buy it because it showed some relative strength to the futures. And then you had a trade above the prior high, which is right here, this 91. And then you could have picked and chosen a spot to sell it. You had to be in here, in the pressure cooker. Sell some up there, small little reversal candle right there into the prior high. Then, you could have said, does it hold higher? Does it hold 91? And right here it didn't. So that was your lighten up, and then it did nothing the rest of the day. So you have to know, what's going on here, when these things trade. On a daily, is it still fine? Is it still above the descending channel from all the way back here? Yes. Is it still above this pivot from where it broke out from? Yes. But on a day trading level, it's not that compelling anymore. The setup is a little different now, And then same thing with GPRO. GPRO guys have been making money with, but now for the first time in a while, you had a small red dog reversal this way where it lost some momentum. It's extended from the 8-day now, and it traded through a prior high, did a little bit of a squeeze, and came down. That would be a bit of a sell signal for me. You know, some guys even maybe get short for a retest of that. I don't know, it's up to you. But either way, it's been a decent trade from the lows, but it's still somewhat of a broken name and just a retracement type of situation. You know, so on this, there's no real setup here now, so you'll see. The TLT, some guys covered today, great trade. For those of you that, you know, saw the failure at the 200-day again, you know, got short there, decent spot to cover. You know, with that being said, you want to see if the banks did okay with the rates going up, and you know, this Goldman's getting a little wishy-washy around the 8-day, so just take a little care here as far as whether or not, you know, this momentum stays tight or needs to come in a little bit more. Citigroup, which was upgraded by Goldman yesterday, still building. These banks still look better than some other sectors, so you know, the mantra or the narrative is when rates go up, something needs to be bought, and as long as these banks continue to get bought, you know, it could help the market hang in there, and we'll see if that's the case. You know, this has been holding the 21-day, and maybe Goldman wants to test its 21-day, which would be down here, and as an active trader, you don't have to sit through that, but at least you have your point of reference right there at 205.65. Bank of America is acting a little better for itself. This one closed near the highs. Here is when the trend changed. Right there is when it started playing catch up. And I guess if the market's going to, you know, have any kind of strength, maybe there's another trade above this 17, still above the 8 and 21 days, so there's some commitment to this. Could play some catch up or not, but something that is more glass half full than glass half empty. The USOs, what did you guys do today? Third up day, coming close to the moving averages up here, not very compelling, but not showing you that it's just a blind short. I was in the XLE today, I didn't take it home. I thought maybe you could have a clean day one here, which you could still have. But I just don't love the group, and it is a laggard group, but you know, I thought maybe money would rotate there if oil got stronger, and closed okay. But to me, you know, it's a broken group. You know, you had your reversal here. If you sold there, maybe it's worth a try down here, but it's below every moving average, below the 200-day, so I'm always cautious when that happens. The airlines actually acted pretty well, you know, considering the early morning strength. I would say with UAL, you know, now you have a little floor here to see if it goes sideways to potentially come back up and test a 200-day. Still broken from right here, but you know, I guess something to watch to see if it's a headwind or not. And you know, I wish I really had more for you. I know that again, I said this morning. First of all, you know, this is my, you know, we got stools now, so you see, like, if you see in the morning call now, you know, we're like this. Because we're getting old. You know, I could run an Ironman. I ran 30 miles out of the 100-miler, but if I stand for 20 minutes on my left leg, you know, starts to fall asleep. And my co-host is multi-month pregnant, so we're sitting down now and trying to relax on the morning call. You know, so sometimes you can relax, and sometimes you want to be up on guard. Same thing with the market. Sometimes you want to be on crazy offense, and you want to be going in 7-8 positions. You want to be trading size. You want to be looking for breakouts, or you want to be on defense, where you're like this. Trying to do a little less, trying to be very specific, trying to take trades and just not get into trouble. I'm trying not to get into trouble. I'm trying not to, you know, be overly excited and trade things that I'm not comfortable with or used to, or that I don't have in my game plan. I will say, though, that, you know, volume sifters are working well, and that these news plays are getting more attention than the overall sectors. Like, I think Flo called out this GEVO, and it doesn't look like much, but this thing was up a high percentage today. And if you go look at the volume on it, you know, it had a nice volume bar. So there are little plays like this that are popping up that, you know, are getting a little bit of follow through to the upside. Doesn't look like much, but I think this was up 80%, you know, 80 cents, which was like 20 or 30%. You know, and it actually even gave you some trades, you know, where you could have done it. Look how it woke up on this volume bar, came back in, started to go up, and you could have been a buyer here around 340-ish, and you know, made 45 cents on that's a big percentage move on a play like that. I think, you know, these guys were also talking about INVE, which did the same thing with the Disney news. Not a lot of volume, and then boom, volume came out and woke up there, and then, you know, it went 40 cents. So I guess some people that are trading these news plays, look at the volume there. First day up, the thing was $14, was $12, so it was worth a look. Who knows if you get follow through tomorrow? But you know, for those of you that do play the sifter news volume game, you know, you got to know what's coming out. The little bios have been the plays because of the conference, and then you have these other things that come out with news, and if volume hits and volume stays, maybe you got an extra cash flow play besides the normal stocks that are on our 2030, you know, go-to list that we rotate through. So until we get some kind of breakout or breakdown or some more clarity, whether it's Greece, we'll see what happens with it tomorrow, whether it's the jobs report Friday with liftoff. You just continue to just do things to keep your frustration down. Take some trades, because there are some trades out there. You just can't expect too much, and at times you'll be pleasantly surprised, whether it was LinkedIn today or even Facebook today, or some other things. I think some guys were out in the JUNO early before the move, and then everyone was saying how okay that was taken out of context, and you could have made some money even short it. You look at JUNO, and there was a quick spike up, and then it came down. You look at the 5-minute chart. First move volume came in. Let's go even to the 3-minute chart to see how you could have handled that. The first move was like this. Actually, this was, you had to catch it early. You had to have your news sift or filter, because I remember it was up 3, and then it just took off. And then you could have had your sideways channel. Then once it finally broke this 59.60, you had a $2 to $3 move to the downside. So, catch it quick, make some money, let it go sideways, big wide range bar right here. You make some money short, and you move on and say, okay, that was a high volume play that was a little overly, look from where it came from to all the way up there, was just a little overdone. And that's what your job is as a trader, is to figure out if things are underdone, overdone, or not even worth looking in the oven at it. So tomorrow's Wednesday. We'll figure out where we're at, and I'm very light tonight. So if we open up tomorrow 8-9 handles, I'll deal with it. And if we open down 8-9 handles, I don't even know if I'm going to be in too much of a rush to buy things. So I'm just going to figure it out, put some green days together, and once we get some continuity, hopefully I'll be able to put back a portfolio approach. But as of right now, nothing is blaring at me where I need to hold it and be in harm's way when the market's not telling me exactly what it wants to do. And not that it ever does, but sometimes at least there's more clues. Have a good night.